Sup guys, Christos here. In today's video, I'm going to be talking about my latest investment into the iShares electric vehicle and driving technology ETF. What I'm going to be doing is sharing everything you need to know about this ETF, why I have decided to start investing into it and why now, and then finally I'll share exactly my strategy with investing into this fund going forward. All I ever ask from you guys is that if you do like these kind of videos, then do not forget to drop this video a like down below. But having said that, let's jump straight in. Okay, so what is the iShares electric vehicles and driving technology ETF all about, apart from it being a little bit of a mouthful? Well, firstly, let's talk about its investment objective, and that is to track the investment results of an index composed of developed and emerging market companies that focus on electric vehicles and driving technologies. So basically, this is not only going to give you exposure to the auto suppliers, but also to the companies building the parts and pieces of technology that allow these companies to thrive. Just some quick price stats for you. The stock currently actually sits on the London Stock Exchange under the ticker symbol ECAR. However, the currency is actually in US dollars. So if you are investing from the UK, some form of currency conversion is going to have to take place. The stock is currently up 18% roughly year to date, and it sits at around $8.53 a share and has been trading since the 20th of February 2019. Another few pieces of information about this ETF is that it's actually made up of 89 different holdings, which we're going to dive into shortly, and it has a total expense ratio of 0.40%. So for example, if you invested £10,000 over time into this fund, what you would essentially do is pay £40 in fees to the fund managers, who are in fact BlackRock Asset Management. It's also worth noting that this ETF does not currently pay a dividend back to its investors, but that's not to say it won't in the future. Alright, so let's now take a look at some of its top holdings. Of course, I'm not going to dive into all of them, but I guess it will be no surprise to many to see Tesla as the largest position in this fund, with it making up 4.09% of the fund. From there, we have Nvidia, which are going to be more on the driving technology side of things, and then we have BYD Limited, who are one of the biggest EV manufacturers in China, and a fun fact, they are also backed by Warren Buffett's Berkshire Hathaway. However, as we start to look down this list, we are going to start to see a lot of the more familiar faces within the auto industry, with most of these big players in the car industry all making moves into the world of EVs. We of course have Ford, we have General Motors, and then we have Nissan and Volvo, who actually owns Polestar, which I think is an extremely exciting electric vehicle that I've actually started to see pop up from time to time. However, one thing to note is that a couple of the popular EV stocks that have been talked about recently, of Lucid and Rivian, are actually missing from this ETF fund. However, these two are extremely new public companies, so it wasn't something that I was actually expecting. But overall, as you can see, what we have is a large range of all the different electric vehicle manufacturers and the big tech companies to back them up. So what this really does give you is full exposure to the entire EV industry. Now, if you wanted more info on the fund in general, what I'm actually going to do is leave a link to its investor relations page so you can check out all of the different holdings. But right now, let's actually jump into why I have decided to start investing into this fund and why I have chosen now as my time. And when it does come to why I have actually chosen now more than ever, it's actually on the back of a massive mistake on my behalf. So basically, when it comes to me, I have always been extremely interested in the EV industry. I have wanted a Tesla pretty much since the day I set eyes on one, and also since then I have been saying I am going to invest into the company. Now, let's fast forward 5 years and almost 3,000% in capital gains, and yeah, you guessed it, I still haven't. However, it was only until I sat down recently and looked at my diversity report on ShareSite to realize that for an industry that I'm actually extremely bullish on, I have pretty much little to no exposure apart from the positions that I have in my S&P 500 fund, so I think it's time to change that. And the reason why I went with this ETF, let's say, over investing directly into Tesla, is that whilst I love Tesla and I'm confident that Tesla will continue to grow and thrive in this market, it's that I think so many other companies will actually do the same, because I think one thing we can all agree on is that electric cars are the future, and I just wanted to be able to have a part of all of these companies that are going to have this great future in the stock market. And just continuing on from this point, another reason why I have chosen to go for an ETF over just a couple of individual stocks is that it's typically going to be less volatile. For example, with Tesla again, we have had Elon Musk going onto Twitter saying all kinds of things recently, which has caused this stock to to yo-yo over the past few weeks, and with an ETF and the diversity it actually brings, this is something I simply don't have to pay too much attention to and simply just don't have to worry about as much. But just overall, what I wanted was a solution where I can simply invest into the future of electric vehicles as a whole, and one that didn't actually require too much research and constant monitoring. So that's why I went with this ETF. Now, when it comes to my investing strategy going forward, this is actually one that I'm actually going to play very carefully. This is because, as you may or may not know, a lot of the big EV and big tech companies have been pumping so much recently, creating these insane valuations. So in my opinion, I think just loading the boat and holding, despite it being an ETF, is probably a bad move in this market. So what I am going to do is simply just dollar cost average into this ETF every single week with all of the different spare change that I have. So for example, if I decided to load £1,000 into my Trading 212 account and buy, let's say, some Disney stock, and let's say I have 90 quid spare, what I'll just simply do is take that 90 quid and invest the remaining balance into this ETF. This way I can continue building my positions in my current holdings, but I can also keep buying little amounts at different prices and build this position up slowly but surely over a really long period of time. There is literally going to be zero thought process when looking into any of the companies. That's the point of going for an ETF. It's simply just going to be investing on the basis that I believe the EV industry will only continue to grow over the next decade and become almost the norm for our everyday travel. Now, of course, as I always say in my videos, this is just my own opinion and just me letting you know what I am personally doing. This is not actually financial advice, and you should always do your own research. But if you did want to find out what stocks I am buying and selling in real time, then head over to my free Discord, where I post as soon as I've made any kind of trade or investment. The link to that is going to be in the description. But other than that, I'll catch you in the next one. Take care.